Hello, Warriors. How's everyone doing today? Hope everyone had a great Meltdown Monday and ready for a decent turnaround Tuesday, although some things really happened in Asia for a little bit of a turnaround in here. Hope everyone did okay, capitalized on it maybe. So I had this green speed line here drawn, I don't know, for about a week or two. And last week it looked like an ambitious target. Not really though, but 23%. And we actually had an overthrow on this at the 23.6% retrace of the whole recovery from New Year's or early January. Do I think this is a bottom? I don't. Is this all we're going to get today? I don't know. I mean, halfway back is going to be about 2,900. What I'm hopeful for is that we don't go for this green line. Okay, that's 78.6 back. That would take us to 2480 or so. Actually, I'm looking for something. The key to me is just, I think we'll have capitulation underneath this low. This was late May, early June low of 27.28. So about 26.80 ought to do it, 50%. Otherwise, there is some geometry for down here. And we all know what the super bears are looking for, right? That's a megaphone, which is going to take out the December lows and some of the real ambitious targets. The real bears are looking for this before we get another bull move coming in around 2100. That would be 1.27 of this move. So I don't think it's over. I think you could still sell rips. I think the grand prize, as I said before, is getting people to capitulate under this low because, a lot of people thought, myself including, this may have been the top. So you have a lot of people long. We did a lot of stop hunting here, started last week, taking out these stops, taking out these stops. I think that this is really the target of all the black boxes. HFTs, algos are going to take it down there and could set up a decent buying opportunity. All I know is I really need a telescope to see 30, 40, 30, 50 now. How about you guys? Looks like it's miles away here compared to, it looked like it was going to be a layup up here. So I know I belabored the point, but just for next time, when everyone's looking for one outcome, one scenario, especially pinned down with prices for entry, just wait, and the Fed was going to let you get short at your 30, 40 level, some type of Elliott target. Again, when everyone is looking for one number, quote, it either never achieves it or it becomes inconsequential should it get there. That's what I've seen. So a couple other things happening. Yen really recovered nicely off the 88.6, the bottom of the wedge, and I think the yen's bottoming here. I know it doesn't make sense to think the yen's bottoming if I still think there's more downside pressure left in the S&P, but the tighter correlation in the yen, and I would go with it if we had another shot down. We had 1, 2. If they try and take it down again, I'd go with it, but we're back inside the wedge. Okay, and this was decent divergence as much as it was getting hammered. Higher low, have some divergence here. It needs a lot to turn it into a 2-week reversal. I'd be real surprised to see it close back at 108.63. And in fact, I think a lot of the rallies, most of them will be contained initially right here at the confluence of moving averages up here. Everyone see that? 108, but I don't have a lot of company, but longer term, I think that, as long as we hold the flash crash low, that there's still a shot for it to try and fill the gap it left right in here. initially. I have some moving averages really converging up around the 111 big round number. So that's going to be a big obstacle if we get through 108. And then I think there's a chance for 120. So I think this is going to have more effect on gold and on interest rates. And I've been talking about a trough. I was wrong for one wave in the interest rates in the 10-year, already really upticking. But the yen, as the US dollar yen goes up, it could create yields to go higher. So yields are turning. Let's see, what was the wave I was right for? Oh yeah, this third drive, this little pop here. Now it looks like this could be it. And when you look at it, see how we're above the historical low here? Okay, starting to get a little tail here. And, you know, if we were in normal monetary conditions and we didn't have central bankers, okay, we don't have central bankers pushing things into negative territory, unprecedented things, I'd go, you know what, we could get a quality, something like this, and that would take the 10-year up to about 4%. But I think that would bankrupt the US. I mean, it doesn't seem like a lot, but doubling interest costs would be a heavy burden on the US. But why not just a recovery in yields? You know, back towards 235, maybe 250, 260, just to correct this fall in yields. And should that happen, that means, to me, that means higher US dollar yen, higher yields, and lower gold. So the gold has a nice little throw over. It's working it right now. Look at the glaring divergence with gold at new highs. And, you know, Blake and I have been talking about gold, and, you know, some of us thought we'd pull back to 1380 first before we did it. And I think it was last week when it was breaking, you know, or we didn't have, we only had a second drive. And then I said, well, you know, could still try it again. Well, it's doing it here. We're playing with the wedge line, but there are targets. This is what I'm waiting for on the weekly. 1483.74, which is a 50% retrace of the all-time high at 1900 and the low in 2015. I think it was 1050, 1040. So we'll see. Some shorter term stuff is, you know, this could be a 1, this could be a 2. So come on, gold, rally one more time. I'm shorting it up there, up around 1485. Silver seems to be at least right in here, a little stronger. And why is my preferred short the gold over silver? Anyone know? This is why. Not Apple. Because if you believe this very dramatic move in the gold silver ratio was just the beginning, then this could end up being a failing rally. And once it completes and we start heading down again, that means that silver is going to outperform. So if there's going to be a correction in the metals, when I think there's going to be a correction in the metals, and the gold silver ratio starts heading down again, what's my preferred short when this is heading down? Anyone know? Thanks for reminding me of China, because I want to show the wand too. No, that's all right, gold. Gavin, you got it. Okay, so looking at that, and one reason I don't think the S&P break is over, and there's at least another shot here. Look at this. We are getting a nice reversal here in the wand. That's why we're recovering. But look at this. We have 1, we have 2, and these are pretty high readings, right? 78, 78. My preferred readings for top picking a third drive are under what level? Okay, that's what makes the market, Ite. So I'm looking for a third drive, and a third drive here, again, could upset the apple cart and the S&Ps, right? And speaking about the Chinese and the Fed, just a couple of guesses. I was talking to Jim Welsh. He's going to be with us Friday. Jim thinks that the Fed is going to lower rates before the September meeting to get more bang for their buck for it. And we'll see what happens down around the 2740 level. See if the Fed comes in before that. Also talking about the Chinese, besides this, I was thinking about it, and I'm talking about yields, but they do have another weapon. We all know that for years and years and years, they were the largest buyers. They were the largest buyers of treasuries. Okay, so everyone knows they stopped buying them. So that's one thing. So you took some demand out of it, but it wouldn't take a lot if they really wanted to continue this financial warfare for them just to sell a little. And with the DSI at 98 and what I'm seeing technically, something like that could cause a stampede in the bond market. So looking at 10-year trough in this 170 level, maybe back to 235, 260, tells me that the notes could be pretty decent short. Let's look at them. They're down 12 today. Yeah, they're diverging pretty good on this 1 hour time frame. They could get another pop up that's a 10-year note. Look at the 4 hour. Yeah, coming down from 80 daily. Yeah. Anyway, I think there's a shot at a top and what could really, just technically, but I think the Chinese are going to use that. And I think, what else we're going to see? Currency intervention. Should the dollar start heading up again, that I think I just think every quill, every arrow in the quill is going to be used by both sides. So just get ready for all this stuff. Intermeeting interest rate cut, another push up in the yuan, another shoe to drop in S&Ps, and potentially a position trade on the long side of US dollar yen and take advantage of yields recovering. So that's my take on Meltdown Monday. Any questions before I turn it over to the real pro? I'm just an analyst. Gosh, I almost said the other consonant. Any questions? What would be a big surprise? Everything's a big surprise. Oh, okay, yeah. I don't think anyone's expecting it. Yeah. Okay. All right. Thanks, DJ. Hey, Blake, thanks for stepping up when Mr. Internet shut me down. On a fun day. On a fun day, man.
Yeah, it was yesterday. Yesterday was busy, and it was really busy last night, and I wasn't around. But yeah, yesterday was just kind of like a follow through.
Day, I've dubbed it.
Yeah, it was kind of that as such. Last night I was a little irritated last night because all the action happened. I was at my kids' back to school night. It's like my kids start school on Wednesday, and last night they all got their lockers and figured out where their classes were, and it's all the kids getting to see each other. They haven't seen each other in a couple months, and so that's what I was doing. Let me grab the screen over here.
Not before I show this. Look at this.
I'm sorry. I already took the screen. What were you showing?
Okay. No, it's all right.
Oh, okay. So
Website.
this mayhem right here. This is a 15-minute chart. This all happened while I was
Oh, the yen, yeah.
yeah, and I actually right at that same time I got triggered on a euro pound short, which is it was awesome. That was the only thing that was awesome about the whole thing. I got triggered.
Wow.
Yeah, at 92. I swear it was within half a pip of those highs. I got triggered at because I wanted to sell the 160. This see if you guys.
Oh no, you had a. Okay, I see why.
Well, let me show you. This is I'm already kind of marking a pullback because I'm trying to figure out where I want to add. But this is
Where you
160.
at, bro?
Huh?
Add one more new high you had.
No, I don't know if it's going to hit a new high because see, this is 161% extension of this move, 127% extension of this move. And as soon as I sat back down last night, I put in a pattern in play because we were right here when I sat back down last night, and you know we've just been kind of selling off all night, but I was hoping for a move back up towards like 92, you know, maybe some of this previous support at 92.07 to step in a little bit more. But anyway, you know, the euro pound, the longer term, you know, we're up against, you know, some pretty key resistance. So we'll see if we roll over. But, you know, this US dollar Japanese yen, I want to talk about the US dollar Japanese yen, where we're at right now, because this is a pretty big development. So last night, oops, let me get rid of that. Last night, US labeled China a currency manipulator. So what happened is the treasury did. What happened is this move right here.
Yeah.
Okay, you can see that sell off. We broke through support, right? Yeah. Now that's key, because if you look at the daily chart, that took us below this 106 level and took us into new lows. So, you know, with us breaking down, you know, it looked like, you know, and I was leaving, and I'm like, man, that looks ugly. I'm gonna have to, you know, I'm gonna have to start selling rallies, you know, overnight or whatever. And then I took off to my kids' school. Then all of a sudden we spike up, and then we kept spiking up, and this is all happening through, you know, like I said, I was at my kids' school when this all happened. Well, the China adjusts the USD CNH, the renminbi down. So it was rallying because of the comments about the China currency manipulator. You got the, you know, US dollar CNH moving higher. Then it reversed course because China said that they are, you know,
going to cap it.
They just adjusted the exchange rate lower. And so the dollar yen just turned and ripped higher back through 106, stopping out everybody. And then, you know, this morning they said that they're going to basically that they're going to make sure that the renminbi doesn't, you know, is not too strong. I forget exactly what their comments were verbatim, but anyway, what that's done is that's put a little bit of a bid in the dollar yen back down at these levels. So what we've got to look for, because equity market futures have recovered. Okay, so you got stocks that are recovered. Now I'll come back to that here in a second. The US dollar Japanese yen is holding above, you know, this 106. Let's just call it like 106.30. And I think the risk is if the dollar yen closes back above 106.80, which is, you can see this pink line here. See that one right there? So if we close back above this 106.80, that's going to be, you know, an argument for a false breakdown, which could, you know, allow for the dollar yen to continue to recover. But we'll see if stocks can recover, because that's going to be pretty important, right? Just making sure the stock market continues to recover here. So if you look at equities and you look at the, let's go over to the S&P. Wherever it is, there it is. So here's the S&P. We were trading below the 200-day moving average. We bounced, you know, and we bounced all based on that China, that, you know, the China comment news. Equity markets are holding up pretty well. I think the test for the S&P will be up here at 2,900. That's where I think the test is. And for those of you that are, thinking, well, I just want to, I want to be able to sell, the S&P on a move higher. Well, I think you got to look at the 50% retracement, maybe a little higher than that. See where we're at, above 2,900, and see how we're reacting up there. But I think those are going to be the levels that you have to really be focused on a move higher on the S&P. We are in turnaround Tuesday right now, so let's see if we can capitalize on this turnaround Tuesday move. I'm not 100% confident that we can, but like I said, it is Tuesday, so it wouldn't be surprising based on the equity markets and how we've seen them respond over the last year, that we recover going into this week, and we'll see where we're at towards the end of the week. If we can stall around the 2,900, maybe a little bit higher, and then from there, see where we go. But I do think that we've got to be careful of the equity markets, bouncing a little bit here, because they've already kickstarted it, and people would rather be long than short. We've had a decent correction. Let's see what correction from high to low we've had percentage wise. We had an 8% correction, at the lows. So there's probably some people stepping in from a value trade proposition. Like I said, whether we can take us to new highs, I doubt that. But I do believe that we could probably have a couple of up days, taking us back to 2,900, maybe 2,930 from here. So with that being said, you gotta take that into account. Now, if you look at some of these other, like the majors, like the euro, we had a nice recovery off of the lows, but I'm a little skeptical about being long the euro up here when you're above the 112 level. This was the underside of this previous support. A lot of these trend lines came in right around the 112 and change level, and we're struggling to make gains here. So as far as the euro dollar goes, I think you got to be a little careful with the euro here. And I wouldn't mind buying the euro on a dip, back towards like 111. I just don't know if I really want to be a buyer up here. That's a nasty looking daily candle. Now there's a lot of day left in today, so don't think that the euro can't move all over the place today. But I think that a significant dip back towards 111 may provide a better opportunity for longs. Okay, so anyway, just a few things that I'm looking at regarding the majors. I think Stelios is here. It's the day before his birthday.
Hello,
right, Stel?
I'm here. Yeah.
Good morning.
I can't guarantee I'll be here tomorrow, but I'm here today.
Well, happy almost birthday. So, what do you make of this China action that we've seen? With their rhetoric over the last couple of days, or last few hours, rather.
Well, it's basically what we're seeing is just escalation, and yes, I think we can all agree that China did devalue the 1.5% yesterday, and then after the comments from the United States side, they kind of reversed it a little bit. But overall, this is a clear response to the new tariffs that Trump has announced. And to be honest, I don't blame them. They have a few weapons they can use, and this is one of them. So do I think the yuan could continue? Yes, I think so. And then what are they going to do on the U.S. side? Are they going to cut intermeeting like Jamal said? Maybe, but the bottom line is we're seeing escalation, and this is a global thing, global phenomenon. We're seeing the opposite of globalization that we've seen. Sorry, go on.
No, we lost you there for a second. You're fine now. You're fine now.
Okay. I was going to say, we're seeing now in the last few years the opposite of the great globalization that was happening over the past few decades, and it's a bit worrying because you really, in order for countries to flourish, what you want is no tariffs, no obstacles, no barriers, and you want goods and services to flow freely, theoretically. So I don't like this. I don't like this in terms of the global economy, and the markets certainly don't like it. And then, I mean, look at copper.
It's not only theoretical, Stelio. I mean, it's well established that once you have competition on a global basis, the consumer is only to benefit, right?
Oh, yes.
Each economy can export whatever it has a competitive advantage to do. And, everybody gets to benefit from that. Everybody on every level. So, yeah, I think I don't think that somebody can make a sound argument that deglobalization having to do with trade, right, because we're talking solely about trade, is something that can have any kind of positive effects in the medium to long run.
Yeah.
For the global economy, no. I would agree with that. So, and good morning, Steve. How are you doing?
Good morning, Blake.
Good. Well, we've seen Steve. I'm sure you're going to have a take on what China's done overnight, and how this how the renminbi has adjusted a little bit, and we're seeing the dollar yen firm up off the lows. But I'm gonna pass it over to you because I need to step out for just a couple of minutes. I want to thank everybody for listening in today, and Stelios, happy pre-birthday if we don't see you tomorrow.
Thank you.
All right, guys.
Steve, one more thing I want to
talk today, Blake.
Thanks, guys.
Before you take over, and that is sorry, my connection is not very good today. I don't know what's happening, but I want to mention that we had maybe, yeah. We had the RBA overnight, leading rates unchanged at 1%. The markets were pricing a tiny little chance, well, not tiny, I can't remember exactly how much it was, but the chance of a cut, it didn't happen. We have the RBNZ tonight, and they're expected to cut. So the Aussie is outperforming, although the governor did say that the risks, global risks have increased. Inflation forecasts are taking lower. Growth forecasts are taking a little bit lower. So this is in line with most central banks seeing the global uncertainty increase, and they're taking a more let's say conservative stance, which makes sense. So we didn't have anything from the RBA today, but the RBNZ I think is going to be interesting. And my view has always been, well, for the recent months, the RBNZ is always on the dovish side. Whenever they can, they always err on the dovish side. They've explicitly said they want the currency to remain cheap, so that can improve their exports. Most countries want that, but the RBNZ has been one of
then we lost
out in a few hours' time.
Yeah,
you macro man.
You see what happens when you're roaming the Greek islands. You don't have a problem.
Yeah. I'm sorry. I'm back in Athens on Monday, so back to complete normality on Monday.
Okay, perfect. And anything else, Stelio?
You mean your internet connection, normality?
Yeah. Anything else? No, I'm just gonna hit the beach now, so I'll see you guys.
Oh, go ahead, rub it in, man.
Everything else is abnormal when you're in a big city in comparison to being on the sea. I would agree with that 100%.
Yes.
Steve, I could see you as being a fisherman casting out your net in the middle of the sea out there. Pulling in instead of pips, many fish.
I really couldn't see myself doing that. I mean, I enjoy nature, but I'm very spoiled. I mean, I'm up of doing anything, as no matter how tiring during the day, but at the end of the day, I want to have a nice hotel room with air conditioning, a nice shower, and a nice bed so I can sleep.
That's Jewish camping.
I had never heard the term before, but I like it. Yep.
Yeah. Oh, Steve, before you get going, I just want your opinion. I was thinking about starting a new reality show, and they have one on right now, Naked and Afraid. It's like a man and a woman trying to survive for a week. I was going to call this Clothed and Afraid. and Mark Zuckerberg and his wife were going to have to live in an apartment without any servants and have to take public transportation to the office and cook their meals with food they can only buy with food stamps for one whole week. Would you watch it?
Probably not. I'm not. For a very basic.
Okay, forget it. Forget it. I'm not going to do it then. If I don't
Yeah,
have you. All
I'm
right.
not a fan of all that Big Brother shows and social stuff. And
You wouldn't want to see Mark Zuckerberg have to take a bus to work?
it sounds interesting, but
Okay, forget it.
Unfortunately, life has brought it so that free time is, something that is very scarce in my case, and I would definitely not spend a minute trying to watch somebody else's life. I'm trying to cope by fitting in everything in my life.
All right. So, what's the diagnosis on S&Ps after yesterday?
No, it's not after yesterday. It's before that. I said yesterday, I know you weren't here, that if you remember, for me, it was all about the 2960 level.
Yeah, right.
So once we closed below that 2960 level, I had no doubt that there were lower levels coming, with the first area of support being this confluence of supports roughly at 2865. Obviously, yesterday we had a monster down day, during which we sliced through that as well and almost made the next area of support, which was at 2810.
Held the 200-day, even though poked through it. That a lot of people are watching that.
Yeah, absolutely, and we know how important it is for the, especially for stock indices. Now, first of all, you have to excuse my setup and my monitor. Unfortunately,
nothing wrong with it.
I'm on my MacBook. Yesterday, I bought 2 new monitors, to replace 2 of my 4. And my graphics card decided, after one monitor blowing out, my graphics card decided to kiss me goodbye. So now I have to ship it back to the US because I actually bought it from there. It was a lot cheaper. I mean, it was like $850 in comparison to 1.3k euros here. So now I'm sending it back to Blake. So for the next few days, I'll need to use MacBook. So it's not that convenient for me. I hope it's not that bad for you watching. Anyhow,
perfectly good.
Okay. Anyhow, now there is no question in my mind that after seeing this impulsive move lower, we're not done. I heard Blake. I'm of the same opinion as him. I can't give you a certain resistance area that the index is going to turn lower. I can tell you, though, that the first one on my chart is the one we're roughly testing now. I mean, roughly at 2865. I had it as an area of possible support. Now it can be an area of possible resistance. Now, will that reject price immediately? We might see higher prices from there. But I can tell you one thing for sure. I'm looking to short rallies. Okay, there's no question in my mind that even if this is a corrective move lower, which it can likely be a corrective move lower, we're not done yet. I mean, impulsive moves like the one we see lower don't usually end like this. So I think we should be approaching any of the stock indices here as being in a sell the rally mode, to at least perhaps retest these lows at 2730. So I do think that 2730 is an area that we can easily end up retesting. And actually, that is what I drew yesterday when we were testing that support area. I thought that we would probably stop the day there and we would get a rebound from there before lower prices. As I said, yesterday it was, a massive down day. So we actually made it the next support area. But the general plan, which was, that push lower, then some kind of a rebound, then another move lower towards 2730, the general concept is still valid. Now, would I be looking for more downside or for a big bear trend to begin here and now? Odds would be betting against that for multiple reasons. One of the reasons is because we know what is new that moved stock indices lower. If somebody jumps on saying that it is the trade war escalation, I know that this is not going to be a popular opinion, but I'm going to answer that I don't think so. We never really had a trade war de-escalation. It was more than obvious since weeks ago that at the very least we will need to see a resolution post the 2020 elections. Trump, ahead of that, would need to show some determination, so we would have some escalation happening. So I do think that that is not something new that is happening here. What is new that the market doesn't like in combination with the expected escalation of the trade war is the very hawkish, in comparison to the expected rhetoric that followed the rate cut that we had at the 31st of July. So the combination of the Fed not showing that much of a willingness to help the situation. At some point, Powell almost, in essence, like photographed one cut and one and off for the time being. The market really didn't like that. So, when we also got like news about the escalation, now we have a Fed that is not willing to help that much, and the trade war escalation. The only difference being is that we have seen it over and over and over again, and they have absolutely no reason to believe that it's going to be different this time. As you've said many times, Dale, what is the main factor that the Fed responds to? Stock prices, right? So
they're not data sensitive. They're
exactly.
Do you think there's a shot of them moving before the September meeting if we're down around
No.
2,700?
But what I think is extremely likely is that we're going to start hearing a series of statements that will be pointing to a certainty of a next rate cut, and once again walking back the hawkish rhetoric that followed the first rate cut. So in essence, the Fed is going to respond to the stock movement lower by supporting vocally the upside, by in essence walking back any possibility that the Fed is going to be very, very slow in cutting. So I do think that the lower stocks move, the more the Fed is going to be giving the necessary feedback to the markets to keep the markets elevated. And I do think that initially it's going to work once again. So in essence, the lower stocks move, it's like trying to push like a ball in water. If you want to go deeper, you have to exert more pressure because you have buoyancy, okay? So think of the Fed as buoyancy in this case. So the lower the ball goes, the more the Fed is going to be pushing higher. And I do think that initially it's going to work. Okay, as long as the economic data don't really deteriorate or collapse, in which case then it can become, we can go in panic mode. I think that the Fed is going to be able to support it. So bottom line, this is why I think that we have more downside to follow in the days ahead, but I don't think you should be jumping the gun by thinking that, this is like a high that is going to mark the end of this bull market, and we're starting a new bear market. Okay, enough time spent on stocks. I know, of course, that I spend all the time because I know that it's the focus of interest for many, many people, and expect it to be so, given the latest moves that we had. Yesterday, in essence, I gave a freebie which seems to be working. If you remember, I focused explicitly on the key major level and area that the Kiwi yen was testing. Okay, there you can see it. You have to go back years to see how important this support has been support resistance in multiple occasions. So it was to be expected that any kind of a rebound we had from risk, the Kiwi yen would benefit from that as well, especially given the fact that it was on a major level. I think that it still looks very, very decent against the lows. I mean, we're just like 90 pips off the lows. So if you really want to play through FX, a possible big rebound here, I think the Kiwi yen looks good. I think that the next area of resistance, as to be expected, is this previous low at 70.26. So I think this played out quite nicely. Now, having to do with the most popular pairs, I know that Blake spent a little bit of time, but nothing has changed. For example, I'm going to briefly go over some of the majors. Nothing has changed with the Euro USD. Yes, it did rebound from an important area of support once again. Would I be trading this? Not even if you put a gun on my head, honestly. I mean, why would you want to be trading this extremely slow depreciation? I mean, why would you want to invest capital in essence, seeing something drip lower so slowly that probably rollover costs would have eaten up, all of your little profits that you would have made. Now, having to do with the cable, what I said yesterday stands, triple confluence of supports. You like it to the upside, you can buy it against the lows. Personally, I'm not going to do it. But yes, if we do see dollar weakness from here, the cable can likely rebound even towards 123.73, which was the previous area of support. If that's a big if we make it there, I expect that's going to be a very hard resistance for the bulls to crack. But I'm not even sure we're going to make it there. I mean, it's quite a good likelihood that we're not. What I said yesterday about the DXY still applies, which means, as you see so far today, we have a nice reaction higher, but keep in mind that we remain within this blue ascending channel. We found support at the 50 daily moving average. The 200 daily moving average was a little bit lower than that, and a little bit lower than that, you can also find the channel support. I mean, it's still likely that we're going to push lower towards that channel support, but in order for me to, start looking for more dollar weakness, I would want to see the 95.84 previous low break to the downside. Until that happens, I think that the closer we get to that area, the better the risk reward is to be long the dollar. Now, if we do break below that area, I think that's going to be a confirmation that a period of weakness for the dollar will have begun. And since we've had a prolonged period that the dollar has been in this slow appreciation, I do think that a move lower at the very least should last for several weeks. So I don't think it's going to be too late going after dollar weakness if we break below 95.84. In fact, I think that's going to be probably a trade that's going to be valid for, perhaps even a few months. Okay. Until then, I think committing one way or another, over-committing one way or another, all over the board, like, selling dollars everywhere or buying dollars everywhere is probably not a good idea. It's it's probably a little bit irresponsible. Now, yesterday I covered a lot of things. That's why we actually went over our usual time. But one of the things I didn't cover was the USD CAD. I just, wanted to show that the USD CAD has definitely stalled for the past 4 days on this 38.2% resistance. Keep in mind that it was also previous support here. Even if we break above that, then there's a very nice confluence of resistances at 133. So I would pay attention to that. If you remember, I was advocating that buying USD CAD against that confluence of supports was a very, very good risk-reward opportunity. So if you did that back then, you've already been compensated for that. So I hope you have trailed your stop loss and taken off some profits. I think that going above 133 might prove, quite hard to accomplish. It's going to need, quite a lot more than what we're seeing currently in order for that to happen. And one other pair that I want to cover yesterday was USD NOK. If you remember, I spent quite a few minutes of one of the last webinars I was here the week before the previous one, showing the resemblance, the fractal resemblance in essence of the long-term picture of the USD NOK and the bund, saying that the bund had already broken above its long-term corrective move lower. You can see the equivalent here in USD NOK. And following a period of consolidation after breaking above that descending channel, we had a resolution to the upside for the bund, and I expected that it's extremely likely that the same thing will happen to the USD NOK. Back then we were somewhere down here at 860, 860 something. As you see, we've now also broken above the 880, 882 resistance area, which, even if you want to look at it in isolation, it's still a multi-month rectangle break, because if you see, since November 2018, the USD NOK was trapped within a rectangle between 840 and 880, 882. This breakout would indicate that we're going to see an extension towards roughly 920. Okay, now before that, of course, I have my eyes set on this 161.8% extension of the latest pullback, which comes at 9,012. Prior to that, we might even see a pullback to retest the breakout area at 880, 882. I do think that if such an event occurs, if we do retest 880, 882, it's going to be a very, very good buying opportunity. There is nothing guaranteed in trading, but two things are certain here. We are in an uptrend, and that is a major breakout area. So, from a risk reward perspective and from a trend perspective, buying a retest of 880 makes 100% sense. Okay. Now, let me go through some of your questions. Let me see. Good morning to everybody that says good morning, hi. Good afternoon if you are in Europe. Yes, Stavro, we are, as you know, some of us. China, gold. Okay, let's have a look at gold. I would be long on gold, market condition, Trump, etc. 690. Great analysis, Dale, blah, blah, blah. Great analysis, Dale. You see, coach. TLT. Yep, we can have a look at bonds as well. Absolutely. So far we have gold, bonds. I expect to see JPY and CHF much lower. I hate them. We'll see about that. So far, they keep strengthening. And, I have no technical indication that that's going to be something that is going to be reversing, imminently. We had strong CHF and USD for 2 years now. What a dirty market. Dirty market equals USD, CHF, and JPY strong. Yeah, but you can also see this as a divergence in comparison to what is happening with risk assets, and I think that is something to pay attention to. Don't even need to know, just those who buy. Okay, what's your opinion on the euro yen? We're going to have a look at that as well. Take a look at the VIX movements. It's like you said, going up for this business cycle. Yep, I went through what I think is happening in the long run with the VIX yesterday. I think you should have a look at yesterday's webinar, because many of the things I covered yesterday were not on a short-term basis. So if you lost yesterday's webinar, I do think it's worth watching that part, because the vast majority of the things I talked about was having in mind, the midterm and not like the very short term. I follow you for more than 3 years, and as far as I remember, you're always waiting. I wonder if you open a trade at all or not. That means that you're not part of ForexAnalytix, because you would know that I actually do take several trades. Actually, I took 19. I've taken officially, on our platform, 19 trades since the beginning of 2018, but quite a lot more having to do with my account, and I share many of them on the chat room. Making that point, you give me the ability to make the other point, that just by watching face, you don't get everything we have to offer. People that have joined ForexAnalytix can tell you that very well. we want to offer much to the community. That's why we, give you so much analysis for free. But trust me, we wouldn't be that stupid giving everything away for free, because then there would be no point in us having a subscription-based service, right? So become a ForexAnalytix subscriber, and you can go over all of my past trades and how well they've done, and you can have a look on your own. Bund, yes, we're going to have a look at them as well. Okay, so let's start covering all those questions. Let's see. We had a question about Euro Yen. Let's start from there. I showed that yesterday as well. We have a little rebound today. And as you see, what I was saying yesterday was that, my ultimate target here was this spike low. We did make it there. The next area of support I see is this confluence of support at 116.50. I do think that as long as we remain below this broken triangle, the path of least resistance remains to the downside, and a move towards 116.50 is very, very likely. Now, was today's early rebound enough of a rebound? Not sure yet. Might have been, though. I would be watching like 120.50 as a possible area of resistance here. Now, having to do with gold, which was one of the other questions that we have. There you go. Nothing really has changed since yesterday. I was talking about this ascending channel. We have also made it to the pip, to my target here, which was the 161.8% extension at 1475. Now, the fact that gold today, dollar has recovered, stocks seem to be recovering, but if you notice, gold is still positive on the day. So that obviously quite clearly states that gold remains very, very well bid. I think you shouldn't be fighting this trend. We are at resistance, there's no question about it. So, if I had to do something with it in the very short term, if I really had to do something in the very short term, I would probably sell it, but that's not what I'm looking to do, okay? Having said that, is there really a risk reward here for you to be buying if you were not already involved with it? The answer is no, there isn't. Because where would you place your stop loss and what would your target be? Okay, so as you see, the last part of this appreciation is not really impulsive in nature. I mean, we have this slow grind higher. I wouldn't be surprised if we accelerate higher following that. But, we don't have that yet in hand, and, a pullback might come first. Now, having to do, we had questions about bonds in general, so let's go ahead and cover them all. First of all, there's not much I can tell you about the Bund, and the reason there's not much I can tell you about the Bund is very simple. There are no more targets, and there are no more upside targets left for the Bund. As simple as that. I mean, just look at this long-term formation. We've already achieved
the moon, Steve. We're sending the Bunds to the moon.
Exactly. I've already achieved my last target, which was the 161.8. I mean, the Bund has already made it there. There is one bearish case scenario that I see here, but it is a big speculation. I mean, this might be an ascending wedge, right? You can see it here. And even if we see a little bit of an overthrow, it will still remain an ascending wedge. But in order for me to confirm something like that, I definitely need to see a break below this trend line and some type of an acceleration. Having to do with upside targets, there is nothing I can really give you because, we've already exhausted all extensions that really tend to work. Because after that, I mean, we can start pulling off extensions out of, I know I'm not going to say the word, like, we can put there like a 200% extension, a 227, a 261.8, etc. But, whenever we exceed the 161.8% extension, I stop paying attention because you already know that something is really, really overbought, and then, it's pure speculation how higher it can make it, and it is also irrelevant. Why is it irrelevant? Because, okay, let's all agree here that the Bunds remain in a very, very well-defined uptrend. Okay. Will you be buying it up here? And if you were doing so, where would you place your stop loss and what would your arbitrary target be? So as you understand, this conversation has no point unless we start seeing a pullback, because yes, it's nice to join the uptrend here, but how are you going to do that unless you see a healthy pullback, right?
I have a question that might be a little more relevant.
Go ahead, Coach.
It goes back to the metals, Steve. The gold-silver ratio after that big decline.
Oh, actually, Coach.
Has recovered. Yeah.
I mentioned that yesterday. I knew that you would be interested, but unfortunately you weren't here. I actually was saying yesterday about the gold-silver ratio, and that's what we drew.
Yeah.
That the gold-silver ratio has had a very, very nice recovery, but people should start paying attention, because anywhere between here and perhaps 91 is probably a very good area to be looking for further downside in the gold-silver ratio.
Okay. Thank you, bro. I kind of see that. Okay.
Yes. I do think, Coach, that if somebody would want to start scaling in, being short the gold-silver ratio, that's not a bad idea at all, because the move lower was clearly extremely impulsive, and I would find it very, very, very peculiar if we just have had and suddenly the market completely ignores it and, you know, goes to new highs. That would
plus, even if it's an ABC, is hell of an A wave.
Exactly.
Yeah.
And it should make it, even if it's an ABC, as you mentioned, it should roughly make it. You can even eyeball it. It should roughly make it back to this ascending wedge trend line, right?
Yeah, got it.
Yeah. So I do think I covered that yesterday. I do think that the gold-silver ratio has entered an interesting area that we should be looking for shorts. Look, also, I'm also monitoring this descending trend line resistance on the RSI. As you see, we're getting close to that as well.
Yeah.
As you would have said as well, this reading in the RSI that we had in the low 20s, after, you know, moving directly from overbought territory on the daily to oversold territory within a few days on the daily, it would be very, very weird to go again to overbought territory. It would look extremely weird and, you know, unnatural as a market.
Plus, you have confirmed lows. The momentum confirmed the move.
Yeah.
No divergence at all. Yeah.
Seeing a rebound from the 61.8, because don't forget that this rebound came exactly from the confluence of the 200 daily moving average and the 61 point from that spike low to the high. So that was a very, very nice area for somebody that was short to cover. But we're also now, as I said, entering a nice general area that it's a good idea for people to start scaling in, being short once again. Anyhow, from a historical perspective, now entering again the 90 ratio, 90 ounces of silver for 1 ounce of gold is once again quite an extreme reading. So you are, in essence, buying silver against gold at a very appealing rate having to do with the long-term average. Okay. Now, personally, when we're talking about tangible assets, I think that the best idea with them is to approach them, if you have that ability, is to approach them on, you know, from a physical standpoint instead of financial assets standpoint. So, you know, if you own any physical gold, exchanging it with some physical silver and holding to it, I think it's a good idea, and you're probably going to be rewarded in the longer term, because I don't think that, you know, the gold-silver ratio can keep on being as elevated as it has been for a long period of time, even if for some reason we move to new highs from here. Okay, don't forget that those are physical commodities. We know their scarcity. We know their analogy. I mean, between how much silver we have in comparison to how much gold we have, etc. So we have a rather decent way to measure oversold and overbought territory. We're not talking about something completely intangible, like, let's say, Bitcoin, in which case everything is speculation. Okay, here we're talking about actual tangible stuff with actual usages in the real world. So it's somewhat easier to assign relative or absolute values to them. Right, Coach? And here are the treasuries, one of the most interesting charts as well. I don't remember if I covered it yesterday. I covered a lot of stuff. If I forgot to cover the treasuries, that was a big mistake for myself. Not that really anything has changed since yesterday. And the reason I considered this an important chart is what you see here, drawn. I had drawn that several days ago before I left, that we might see continuation higher to actually make it to the channel's resistance before we see a pullback. And guess what? Today we actually overshot intraday the channel's resistance, but we're currently trading below it. Of course, is that evidence that we're moving lower from here? Of course, it's too premature to call it. But I would definitely not be long treasuries against the 78.6 feet, which is a little bit higher, as you see. And most importantly, this ascending channel, which the market has been very nicely respecting since past September. So in essence, it's now, almost a year. It's past 10 months that the market is being moving nicely within this channel, respecting support and resistance equivalently. Coach, do we have an interview today?
We do, bro. And Don is here.
Okay.
Did you hear me?
Yeah, I did. I'm just having a look if there is something that I didn't cover. Okay, I think between yesterday and today, I've covered all questions. As I said, yesterday I wasn't here for several days, so I had like a big overview of the board with the medium term in mind. You really ought to have a look at yesterday's webinar. It's still relevant if you haven't done so. Should cover more questions. For example, I see a question about palladium. I did cover palladium yesterday, so you can, Antonia, so you can check that from yesterday's recording. Coach, I don't want to take more time from your interview. Thank you very much and enjoy. We'll be back tomorrow.
All right, Steve. Great to have you back, man. All right, Don, I'm going to make you a panelist, and then I'm going to unmute you. Everyone stick around for the consummate bear, Don Mead at Seven Sentinels. Okay, you're unmuted, Don.
I
got you.
Okay, you're hearing me okay, Dale?
Yeah, so if you want to share your screen, you just scroll your mouse. There's a green box that says share. Scroll it along the bottom or top, and you click it and share the screen you want to show.
It's going to ask you if you want to take the screen from me. You say yes, and then it's going to give you a pop-up window asking you which screen you want to share in case you have more than one screens.
Oh, I see. Actually, I would prefer to use screen 2.
Okay. Well, you just
totally.
And now, are you seeing a chart that says moment of truth and has the Standard & Poor's 500?
Yes.
Excellent.
Yes. Moment of truth. And you know what? There's something about the markets, Don, that does speak to truth. Money is where the rubber meets the road, and people are voting with their wallet. So definitely a huge break. I think a lot of people on Twitter were looking for 30, 40, 30, 50 S&Ps, and I kept pounding the table saying, too many people looking for one number. It either doesn't get there or blows through it. So obviously we had this pretty big break, weekly ugly candle last Friday. I'm real interested in what the Sentinels are doing here.
Excellent. Well, let me just say, first of all, thank you for having me back. And it's a great time to be alive, and I mean that very sincerely.
You know what, Don? Any day when you're looking down at the grass is a good day.
Yes, it is. Yes, it is.
A bull market, bear market, range market, that's the way I see it.
That is a great way to look at life, and I share that.
But, okay, so I think we're going to be hearing about rainmaking kind of potential in the market here.
Yes, you are.
Okay.
Without a doubt. First of all, you're looking at the screen for 7sentinels.com, I hope, and do you see the Veritas Parite?
Yes.
That means truth never dies.
Okay.
That's our motto. Today, in addition to our motto, I'm going to talk about our mission, and I'm going to talk about the Seven Sentinels themselves. I've never really fully explained them in any of the interviews we've done, so I'll see if I can do that briefly this morning.
You're the captain.
All righty. Thank you, Dale. And it's great to be with you.
Ditto.
Let's see. I got to figure out how to click on my top menus here without there's something that comes down onto them. But at any rate, let's talk. Oh, this is irritating. This is going to be a problem because what happens is when I try to go up here. Well, okay, we'll start right here.
Rio's already commenting that you're a cool guest. And you know what, Rio? I have one comment to you. Steve Volge is one of the best FX traders I've ever met, and I've met thousands. Okay,
Excellent.
Go ahead, Don.
Okay, thank you. The reason I said it's a great time to be alive is because I see where we are in the market as right on the precipice of a very, very exciting period of time in the market. It's no secret, I'm sure, that Jesse Livermore is probably my one figure in historical perspective with regard to markets that I look up to the most. And I think the most notable thing that Jesse Livermore ever did was to align himself at the very beginning of the 1929 to 1932 bear market and ride that entire market through its
Don,
cycles.
can I ask you a question?
Yes.
Because, you know, a lot of people think August is not a significant month. And I brought up that the low in 82 was in August, and then someone told me the high in 29 was in August.
And that's absolutely correct.
Okay, here we are.
Yeah, it peaked in August of 1929, and that first leg of the crash went down to the October 29 low, and the market lost almost 50% on that move. But at any rate, here we are in August of 2019, and I want to show you. To continue what I was saying about Livermore, in that move from the peak in 29 to the bottom in 32, he took his account to, well, he emerged at the tail end of that with $100 million in cash. That's equivalent in 2019 dollars to $1.2 billion. Quite an accomplishment for a trader, I think, especially since he started that venture originally back in the 1890s with $5. He never had another job in his life other than trading the market after he was 16 years old. He was a chalkboard marker in a brokerage firm when he was 15 and 16 years old.
Why did he commit suicide, Don?
Jesse Livermore had a lifelong issue with
depression.
And in the 30s and 40s, there really was no effective treatment at all for depression.
Yeah, people would just use alcohol, like Winston Churchill. And
no, there are all kinds of myths about what happened and why it happened, and that he went broke and so on and so on. He never went broke.
Okay. It was just depression.
Worth a mere $5 million when he died.
See, people don't understand, and they're starting to begin to understand how powerful depression can be. I mean, with people like, would you ever think Robin Williams would commit suicide, or Anthony Bourdain, and what a dangerous disease depression is.
Yes, it is. Yes, it is, and it took Jesse, unfortunately, in the end.
Okay. That depresses me.
Yeah. So let's get on to it.
But I have an antidote for depression because I've been diagnosed with it before. Okay, so here's my antidote. When the darkness of depression begins to creep in, turn your eyes to the light of gratefulness, because you can't be depressed and grateful simultaneously.
Oh, wow, that is
How about
so,
that?
that is so true. That is
Okay,
so
bro, I'm through interrupting you.
Okay, no, that's fine, because I just could not agree more that gratitude is a very
So
important.
DJ told me to lock my gun away. I gave my guns away.
Okay, anyway, what we're looking at here is the Standard & Poor's 500 weekly coming up to the top in the year 2000. This is 1998. This is the year 2000. Standard & Poor's 500 coming up to its exact peak in the year 2000. Here is the weekly RSI for that Standard & Poor's 500. The RSI is, as most know, it's a relative strength index. I won't go into the complicated math involved, but notice that as the market was coming up, it was diverting. It reached its first peak in the 70s, and then around 70 on the next peak, and then at the final peak, its reading was about 63. Now let's switch to the 2007 peak, coming off of 2006. Up goes the Standard & Poor's 500, and down comes the weekly RSI, and it peaks at about 63 on that third top. Shoot, I don't think I have it in this array. Maybe I do, maybe I don't. But let me just tell you.
Is that where we peaked a week or so ago on the RSI?
Yes.
Okay.
Oh, actually, here it is. This will work. Well, this is for the New York Stock Exchange Composite, but it's the same thing as the market made its first high, its second high. Oh, yeah, this is it. The market made its first high in January 2018. It made it a higher high in October of 2018. It made its final high last week on July 28th. And now let's take a look at what the weekly RSI did. Made its first peak clear back in January of 2018 on that first peak. It made a lower high below 70 on that second peak, and lo and behold, last week when it peaked, 63 was the reading. Same exact weekly reading on the RSI as it was at the peak in 2000 before an 80% decline in the NASDAQ composite, and as it was in 2007 at the peak of the Standard & Poor's before a 60% decline in the Standard & Poor's 500.
Okay.
We've carved out the same exact pattern. I'm going to back up for 1 second and just say, here's where we go to our rainmakers. That I'm having trouble here because something that I'm getting from you is encroaching on that top area. Oh, that's all right. If you go down to the bottom of our page, I'm sorry that we're having this problem. But if you go down to the bottom of our page, we have a whole bunch of articles that are linked. If you go to sevensentinels.com.
There you go, they're up.
Yeah. If you go to sevensentinels.com, down to the bottom of the page, all of these articles are available to anybody who wants to click on them to read. You don't have to be a member of sevensentinels.com or a subscriber to read these articles. You just click on them and read them. There are several articles here. Here's a rainmaker. Here's a red sky in the morning. Here's When Worlds Collide. I'm sure you haven't forgotten that one. These talk about the fact that in the year 2017 and 2018 and ultimately into 2019, well, mostly 17 and 18, the markets produced the quintessential top. By that, I mean that if you take a look at measures of greed, measures of lack of fear, measures of internal weakness as measured by advanced declines, volume, number of new highs, as measured by things like Hindenburg omens and the Black Swan Index and all sorts of measures. We had the quintessential top in the year 2018 by those measures. By that, I mean the most extreme numbers that we've had in 50, 60, 70 years.
You mean last December were the most extreme numbers, or recent
Various
years?
times throughout 2018,
Okay.
those numbers hit records that we'd never seen before. So 2017, 2018 provided the top, and it was the quintessential top. It is a top, I think, that when long after you and I are gone, Dale, 50 years from now, they're going to be looking back at 2018 at those tops, and they're going to be talking about how extreme and those were, and how those pointed out the top that a lot of people weren't recognizing at the time. So, okay, now we had the whole top set up in 2018, 2019. Then we had the, as we were just talking about, the
Couple
the
thunderstorms.
RSI
Couple thunderstorms.
the pattern of peaking on lower and lower highs. And of course, here was last week. I'm sorry, I'm having trouble this morning getting myself
Okay, Don, you're doing fine.
The screen setup that we've got going here.
You're doing fine.
Okay, great. Okay, so here we are. In 2000, here are those three tops that I talked about: January 2018, October 2018, and last week in July of 2019. Notice at that time the New York Stock Exchange Composite Index did not confirm.
Yeah.
It made a lower high.
Second lower high.
And then a second lower high. Exactly. That's a triple top. That's a magnificent triple top. It's an amazing triple top, and I hope I've got it on this particular array. No, I don't. But if you look at it at the long-term version of that triple top, it stands out as one of the most magnificent tops that I've ever seen, because it spanned a period of 18 months. If you look at the tops in 2007, the top in 2000, the top in 1980, the various tops along the way, they're very distinct. You can see them clearly on the charts, but they normally only take about a year to complete. Sometimes only a number of months. This one has spanned a full 18 months. It's the biggest top, it's the clearest top, and it followed the readings that we talk about. Now,
does that speak to magnitude? Because, yes. I mean, let's talk about it, Don. We've been together a few times, and we've had some nice corrections and nice breaks, but they ended up being a top rather than the top. Mm-hmm. So are you saying that the magnitude and the time it's taken to develop it makes it that much more significant than
absolutely, absolutely.
Okay. Tell us how much more significant.
You know, it is the fact that each one of those was a top and not the top that actually, in the big picture, is drawing. We can draw some inferences that are pretty ominous. We had a top in January of 2018, and boom, we saw this, and we found out it wasn't the top. We went on to another new one.
And then Merry Christmas.
Same thing, Merry Christmas down into Christmas Eve right here, and then boom, same thing again. So what's happened is this has emboldened the bulls. This has made the crowd very, very complacent, and they're saying, oh, well, you know, these breaks, yeah, we have breaks in the market, but it always comes back. Don't worry.
That is the mentality.
What it has actually done is carved out the biggest top that we've seen in the last half century. So now I'm going to talk a little bit about the the Seven Sentinels themselves, and I moved everything onto another screen, and it's causing me to not know exactly where everything. Oh, okay, it would be on the screen. Let's talk about the Seven Sentinels themselves. I'm going to describe them briefly. Since my studies of Livermore over a lifetime brought me to the conclusion that what really matters in the market is not a setup. It is not what we think is going to happen because the market has set up in a certain way. It is what is happening now in the market. Livermore always talked about the fact that he traded with the line of least resistance. He identified the line of least resistance, he aligned with it, and he stayed with it. That's very different than finding a setup, taking it, and then jumping out. He would align with the entire line of least resistance and stay with it. So
how did he identify that line of least resistance?
That is a bit of a mystery. I think he may have held that back from the biographers, frankly.
Okay.
He talks about it a little bit in some of his other books, but he never goes into great detail. So what it caused me to do, though, was to set out to find a way of identifying at any given time what the line of least resistance is.
Okay.
And
that's what your Sentinels do.
Yes, back in 2004, in furtherance of that endeavor, I invented the Seven Sentinels. The Seven Sentinels are 7 measures of market trends that I found when they align, when all 7 point in one direction, you can count on the trend being in effect and staying in effect until all 7 align in the opposite direction. Those 7 are based on the McClellan oscillator, the McClellan summation, each of those 2 for the New York, and each of those 2 for the NASDAQ. And then also I use moving averages of the VIX, moving averages of the VIXN, which is VIX for the NASDAQ. And then finally, the 7th Sentinel is the BP comp. It's the percentage of all the stocks on the NASDAQ that are in bullish patterns using point and figure analysis. But at any rate, I set up a system where I track the moving averages of all of these things. And when the moving averages cross, or the short-term moving average crosses below the longer-term moving average, that's a downtrend on each of those 7. I then, over the years since 2004, broke those down into monthly, weekly, daily, and the 2-hour 7 Sentinels. Something that has happened this week that is highly significant is the following. Every single one of those, the monthly, the weekly, the daily, and the 2-hour Sentinels went to 0 up, 7 down sell signals. All of them have flashed sell signals simultaneously, the most important being the monthly and the weekly, because the monthly has only given 3 signals in the last 2 years. It's only given probably a handful in the last 10 years. But it is now on sale, the monthly, as is the weekly, as is the daily, and as is the 2-hour. This is the clearest and most magnificent sell signal that I've encountered yet.
Okay, let me ask you something now. So your Sentinels tell you whether to be long or short based upon the mix of the Sentinels, and unanimous sells are very strong signals.
Well, yes, but unanimous is the only signal I take.
Okay.
No, let me say that
let
all
me
7
finish my question.
Have to agree to produce a signal that that we take, that we trade.
Okay, so it gives you a sell or a buy. My question is, how do you figure out magnitude of what the potential is for these signals, or you don't have to, you just sit there and stay with it as long as the sentinels are saying whatever they're saying?
You just said it. That's
Okay.
that's it.
Okay.
As I often say, I really don't even concern myself particularly with magnitude or targets. I
Okay.
care about at any given time only one thing, and that's direction. I
Yeah.
only want to be aligned with the direction of the market right now. Now, I can infer from the size of this top, the magnitude of this top, that it is a doozy. It is huge. It is huge.
Okay.
I can assume from that, probably correctly, that this decline will be as significant as the 2000 decline and the 2007 decline, and probably more so. And I know that's a kind of a scary thought for a lot of us. It's an exciting thought for me because I'm with it. I'm writing it down.
All right. Okay.
So I see that our time is clicking off here.
You have as much time as you want, Don, but if you have more to say, that's fine. If not, you could go to your website and show people how they could follow you and see what your Swiss Guard.
Good idea.
I imagine in my head your Seven Sentinels are like the Swiss Guard surrounding the Pope, and you're kind of like you're the Pope of bearishness.
Okay, thank you. I'll do so in just a second.
I'll kiss your ring at 2100 S&Ps.
Pardon me?
I'll kiss your ring at 2100 S&Ps.
Okay.
Right, go ahead.
But at any rate, here are the monthly Seven Sentinels contained in these 5 charts. Here are the weekly contained in these 5 charts. Here are the daily contained in these 5 charts.
So a day like today, a recovery after a 3% move is really a gift to start. Would you scale in during this retracement?
Oh boy, what a great question. I wish I had started addressing that earlier. We we went short back on July 29th because I got the signals, and we got up to about 50% short, but I did not want to exceed 50% short triple leveraged inverse ETFs, by the way. So that's 150% short. Because I regarded and do regard 2913 as the line in the sand. I wanted to see 2913 taken out before I felt totally confident that the move is on now and here. So I went about 50% short. Yesterday, as the market was down 600, 700, 800 points, I scaled took that down to 33%. Today, we are bouncing on the open. What I kind of think is going to happen is we're going to bounce up here, and then we're going to take a midday slide. And on that, I'll probably take my position down to about 20%. But then I look for a bounce of anywhere from, Fibonacci 0.318 to
halfway back, so 2900. So 2913 was a big number to you.
Yes.
We could rebound there. I think that'd be about 61.
Yes. So what I'm looking for is a bounce in the market. And then as my short-term sentinels roll over, turn back down, and then I'm going to take it up to nearly 100% short. So I'm looking for a bounce up into the 2913 area. Yes, that's a good target somewhere in there. But I will move when the sentinels tell me to move, and I'll take it up to close to 100% short at that time.
Did the sentinels tell you to cover some shorts yesterday?
No. Well, in a
just
funny
money
sort of way,
management to ring the rest.
here's what I mean by that. Yesterday was one of the few times when I had absolutely universal 0.7 readings from the monthly all the way down to the 3-minute sentinels. And when I get 0.7 readings on every single index universally without exception, that's telling me we are really oversold and we're going to bounce.
Okay.
And that's when I started taking some off. And I'll
Okay.
be taking some more off today for that same reason, because that happened. Unless we go straight up, and then I'll just ride through it. I don't care, because I'm in it for the long pull. Here,
Any guess on the duration of this? Not the magnitude, but
I think, as crazy as this may sound, I think the bear market will take us into 2021.
okay.
Here are the links at the bottom of the website, and as I indicated, I would recommend that people go back and read some of these articles about Red Sky in the Morning or When Worlds Collide that talk about the excesses of the 2018 market. Here's limited time trial, because I really want people to get involved now at the beginning of this move. I'm running the best special offer, limited time trial offer that I've offered all year or will offer the rest of the year. They can have a full week for just $4.95 if they click on that link.
Boy,
So,
you're going to be going to McDonald's a lot.
that's right. That's right.
All right. Well, you want to show it?
Blaze. Pardon?
Click it. Let's see it.
Oh, okay.
There you go. Okay, so you can follow Don on Twitter at Seven Sentinels, and that's also his website, www.7sentinels, spelled SENTINELS.com.
That's right.
Anything you want to wrap it with? One thing people should keep in mind the rest of the summer, Don.
I don't know what that would be, other than I think this is the
All rips.
best game ever devised by man, and I am really pleased to be a part of it, and I'm pleased that you are too, Dale.
Well, thank you. May this rainmaker rain pips down on you, Don.
Thank you.
And all your subscribers. Good hunting the rest of this trading season, and I have you booked for October, so we'll see how things play out.
Oh, you kept that one. Okay.
I kept that one for you, and we'll see how things have played out into the perilous month of October and the scariest day of the year, Halloween.
That's right. That's right.
Thank you, Don.
Exciting. Thank you so much, Dale. I've really appreciated all that you do and being with you today.
Love it, my trading warrior brother. Glad to serve. So that's it for our Turnaround Tuesday, everyone. Thank Don. Give its trial a shot. And remember, don't just count your pips, count your blessings. We'll see everyone tomorrow. Adios. Thanks for your attention. Thank you, Don.
Yep. Good day.